Howdy, everybody. Welcome to Liberty Call. It is Tuesday, October 1st, 2024. Hope you're having a fantastical day out there in the interwebs. Astros are on TV and they're playing like poop today. They're down 3-0 in the top of the seventh, I think. So they can't manage to get anything going. So I was worried about AJ Hinch's Tigers coming to town. You know, AJ's a great coach. So let's cross our fingers and hope that they can pull it out here in the last third of the game. So, all right. Well, it is a beautiful day here in Colorado. It's a little chilly today when I woke up. We had the windows open. It was like 64 degrees in the bedroom. It's like, "Grr." So anyways, well, before we jump into the numbers, we got a lot of big stories going on today. Not as much from a financial world point of view. You know, we got the world going to war in the Middle East, or at least from what I could tell, even Fox Business had it on rockets going into Tel Aviv and other places. So not looking good. All right. Well, before we get started, if you could give me some thumbs up, a like, a share, a subscribe, a follow, and press the notification bell. All right, let's get into today's numbers. Dow Jones was down 0.41%, 173 points, closed at 42,156. S&P 500 down 0.93%, 53 points, closed at 5708. NASDAQ down 1.53%, closed at 278 points, closed at 17,910. VIX was up 15.12% today. It's at 1926. Canada up 0.14, Brazil up 0.61, and Mexico down 0.57. Over in Europe, Germany was down 0.65%, the UK up 0.48%, France down 0.81%, Netherlands flat at 0%, Spain down 1.72%, Italy down 1.04%, Switzerland down 0.77%, and Italy down 0.8%. So most of Europe was in the red. Russian exchanges, the MOEX down 1.63%, RTSI down 1.78%. And the Asian markets, the Nikkei was up 1.97%, Australia down 0.74%, New Zealand up 0.22%. In China, the Shanghai, again, big number. Oh, I'm sorry. Let me stop. These are yesterday's numbers. Everything's closed. I was wondering why everything was so high. Yeah, everything across the board was closed in the Asian, outside of those three in Japan, Australia, and New Zealand. So we shall move on. So we do, obviously, we talked about it yesterday. The big, all the stimulus is really what has created that big jump in the Chinese markets. All righty, well, let's get to the market recap. Index is in lower as Iran launches missiles at Israel. Defense shares rise. Well, there's a shock. On Tuesday, U.S. stocks closed lower, with the NASDAQ falling more than 1% as investors reacted to escalating tensions in the Middle East. Iran fired missiles at Israel in retaliation for its military actions against Tehran-backed Hezbollah forces. In response, U.S. President Joe Biden directed the U.S. military to assist Israel's defense, including shooting down missiles aimed at the country. While most sectors declined, energy stocks rose, supported by a 2.4% increase in U.S. oil prices. Defense stocks also gained, with Northrop Grumman and Lockheed Martin climbing, and the S&P 500 Aerospace and Defense Index reaching a record high. Utility stocks saw gains, while airline stocks, including Delta Airlines, fell due to concerns over increased geopolitical risk. Market volatility increased as investors grew cautious about further escalation in the Middle East. Peter Tuz, president of Chase Investment Counsel, noted that market weakness could continue if the conflict worsens as uncertainty weighs on investors. Economic data showed a rebound in U.S. job openings in August, while the Institute for Supply Management reported manufacturing activity at 47.2 for September, slightly below expectations. Investors are now focused on the upcoming jobless claims data and monthly payroll report. Traders expect a 62.2% probability of a 25 basis point cut. They're already talking about more cuts from the Federal Reserve in November, with some anticipating a larger cut. Additionally, a port strike on the East Coast and Gulf Coast added to economic uncertainty. Yeah, that's something I forgot to bring up. I had seen that over the weekend, that there was going to be a longshoreman strike, basically from Maine all the way down to Brownsville along the East Coast and the Gulf Coast. So, some things to think about is that how is that going to affect businesses on the West Coast? This is not investment advice, just something to keep in mind, if you're doing your own, stock picking out there, is that, this does not affect the West Coast at all. So while they were a pain in the butt during COVID, as far as all the slowdowns there, they may be extra busy if this goes on for any significant period of time. And I heard a recording from I guess he was the union chief for the longshoremen's group, and he from what he said, he sounds like an old school Tony Soprano gangster, and he'll shut it down. He doesn't care. He knows how much business and money and food or materials and everything that goes through these ports. And he basically got the business side of things over a barrel. So we'll see what happens. I mean, could be a mess. All right, let's get on to our next article here. Some economic data. This was yesterday's Monday morning outlook from Mr. Brian Westbury. He didn't send it out until the afternoon because I even went and checked on the First Trust website before I did my video yesterday afternoon, and it wasn't up yet. So his Monday morning outlook was really more like Monday early evening. So, but let's read through this and see what he had to say about profit and stocks. Let's see here. The Commerce Department recently revised its GDP and corporate profits data for the past few years. Real GDP for the second quarter of 24 was adjusted upward by 1.3%, leading to an annualized growth rate of 2.3% since 2020, slightly faster than the previous estimate of 2% even. Additionally, corporate profits saw a significant upward revision, with pre-tax profits now 11.5% higher and after-tax profits 13.3% higher than initially thought, driven mainly by domestic non-financial companies. Using these updated profits and 10-year Treasury yields of 3.75%, a capitalized profits model suggests the S&P 500 is overvalued by about 18%. So that means, let me take that off the screen. And where's the S&P 500 right now? We're at 5708. Let me put that back up there. Okay. 5708. And let me get my handy dandy calculator over here. Alrighty. So 5708 times, and it says here 18%. So that means 0.82. So the S&P 500 would be fairly valued at 4680. So that is a pretty big drop. So anyways, let's get back to our article. However, the model also considers pre-tax profits as a true reflection of economic activity, excluding the influence of fluctuating corporate tax rates. The current corporate tax rate of 21%, the lowest since the Great Depression, has contributed to strong market performance. If corporate tax rates are cut further, as suggested by President Trump, after-tax profits could rise, potentially making stocks appear undervalued. Conversely, Vice President Harris's proposal to increase the corporate tax rate to 28% could lead to a 9% reduction in after-tax profits. So choose wisely with who you vote for. Despite the upward revisions to profits, risks remain with declining money supply, rising recession risk, and persistent overvaluation in the market. Caution is advised. While some market sectors may be less expensive, the overall stock market is no longer attractive as it was between 2008 and 2022. All right. So yeah, it would not be good if everything if we have some sort of a black swan event, you'll be happy if you only lose 18%. So, all righty. These dummies, gosh. All right. Well, let's move on to our last article here. It's a data report from First Trust, the September ISM Manufacturing Index, put together by Nate Guernsey. So let's get to my notes here. The ISM Manufacturing Index remained weak in September, coming in at 47.2, missing consensus expectations. Manufacturing activity has contracted in all but 2 months over the past 2 years, with only 5 of 18 major manufacturing industries reporting growth in September. Let's see here. Demand remains weak, as seen in the new orders index, which registered 46.1, marking a prolonged contraction. Respondents noted a general economic slowdown and are adjusting production accordingly. What happened here? Did he slide off the bag? Maybe. The production index stabilized at 49.8 after a sharp dot in August. Manufacturers have relied on order backlog built up from pent-up demand during the COVID years, but this buffer is weakening as the backlog index remains in contraction at 44.1. Employment in the manufacturing sector is also showing strain, with the employment index falling to 43.9, near the lowest levels since the COVID lockdown period. The ongoing weakness in the manufacturing sector is likely tied to reductions in M2 money supply, which began in early 22 and persisted through late 23. Although M2 has seen moderate growth recently, it remains below levels from 2 years ago. Yeah, I mean, we had too much cash in the system. With the prices index dipping into contraction for the first time this year, inflationary pressures in manufacturing are expected to ease later in 2024, alongside continued sector weakness. Additionally, construction spending fell 0.1% in August, driven by a sharp decline in home building, partly offset by increased highway and street projects. All right, well, that is all the news for today. If anyone needs anything from me, please go to DSAFinancialGroup.com. That's where you can go get all your financial planning needs addressed. So feel free to give me a buzz. All right, well, that's everything that I had for today. I'm going to watch the rest of this Astros game and try not to have a stroke. And hope you all have a wonderful evening. Adios.